Oh, okay, so great. So we already have some attendees here. Nice. Okay, yeah, I think our live stream is working now. Yeah. Sounds good. Yeah.
Great.
Can you see my screen now?
Yes.
Yes.
Okay, great. Yeah. Good. Nice. So maybe let's wait for one more minute and let's kick it off. So, and while we are waiting, so everyone feel free to adjust your seat position or grab a water and just get comfortable, and also feel free to scan these two amazing QR code here to get to know more about Heista and also about Moomoo. We will start shortly. I hope I could play some music, but then that means I need to unplug my headphones. Okay, so it's about 1 minute, so let's kick it off. All right, so hi everyone, I am Tianyu. Really nice to meet all of you here, and welcome to our event co-organized with Moomoo Inc. And today's theme is Make Your Money Work for You. So before we start, let me give you a very quick intro about Heista. So Heista is founded in 1999, and since then it has become one of the most influential nonprofit professional organizations that empowers Chinese American entrepreneurs and leaders. And at Heista, we offer a series of events like today's Heista, what we call educational seminars. And we also have Heista Talk, an annual conference, where we hope to build this platform to have great minds meet and connect with each other and encourage good values. So for today, we are really excited to have Caroline Bao, the Vice President of Marketing at Moomoo, and also Tim Waterman, the Partner Marketing Manager at Moomoo, to join us and share their insights on personal finance, on investing. So without further ado, let's welcome Caroline and Tim to the stage and share out. Yeah.
Thank you so
Hello,
much,
everyone. Thanks for coming.
Tim, we will be projecting.
Yes. Okay. Okay, and today we're going to be discussing how to make your money work for you, and just jumping right into it. So just a legal disclaimer real quick. So none of this is an investment advice. This is strictly for educational purposes on, just basically personal finance and the Moomoo app. So 3 pillars that we're going to cover today include personal wealth management, stock picking, and trading psychology.
Yeah, thank you so much, Tim, for bringing us into the content. Let's go dive right into our first part, personal wealth management. Most of us who are in the audience, you all know that we try really hard to be the best at what we do professionally, but sometimes it is important, and us at Moomoo, one of the things we really do and we love doing is really to help remind everybody, please don't forget that as much as we are doing our best work, we do get income. Let's make sure we make that money work for us so that we do not have to work for money. And obviously, we didn't create this quote. It's actually created by Warren Buffett. So we wanted just to first and foremost remind everyone in the audience, you are definitely in the right seminar today. So it is a really critical life skill. And we're really excited to share with you some of the tried and true tips and tricks when it comes to making your money work harder for you. Let's take a look at what is that playbook. from a personal wealth management standpoint, when it comes to personal wealth management, it can become very confusing very quickly because already I recall years back when I first picked my first Kiplinger magazine, and I was just amazed with how many different personal monetization tools, if you will. There are so many different tools with regards to IRA, Roth IRA, backdoor Roth IRA, and increasingly as your wealth grow, you would have heard of CLAT, IUL. The vehicles of making your money work could be thousands, if not hundreds of thousands. How to think about that really in a sensible way. So let's take a look at that. Go ahead, Tim.
So yeah, personal finance KPIs are really similar to company KPIs. So just like you have a balance sheet, showing your shareholder equity, you could have something similar for your personal finances. And cash flow is super important. You always want to make sure you have enough on hand to cover your living expenses, emergency funds, and just to cover day-to-day expenses. And then your income statement. So you always want to be increasing your day-to-day income, and over time increasing what percentage of that is passive income.
Yeah, it's super important. And for that, one of the things, it took me years, in fact, but with the help of our research team at Moomoo, I was able to really realize not only me as an individual, but also almost all investors can have a sensible way to think about money. So first, I mentioned earlier to you, there could be thousands, if not more, investment tools. Where should they reside? And then one of the other common questions a lot of people encounter is, hey, what's your risk tolerance? We're going to answer all of those questions later, but let's first look at what is our purpose of money. If we have $100 that comes in as our income, the first thing I would highly recommend all of you think about is protection. Why? Because protection is to say, we're all healthy and we can do what we do, but we are providing for our loved ones, family, kids, etc. Our protection needs to be the longest bar, meaning if something would happen, for whatever reason, we're not pulling in as much money, they have some protection. And then the second bucket where you may want to spend your income is to immediately reduce that bad debt. Any of the credit card debt, high interest debt, cut them out as quickly as you can. Then manage your good debt. Why? Mortgage, as an example, is a good debt. They show up on your credit history. If in fact, folks in the US, as most of you guys know, if you don't have some sort of borrowing, it doesn't really help you to build that credit history, which then becomes critical as you have to think about borrowing loans. So mortgage is incredibly effective way to stretch your overall leverage and your credit and your ability to afford other things. Don't just rush to pay it off. The next one is retirement. Why? Before you think about, for instance, buy the next investment property or put in money for the angel investment, first and foremost, think about how to pay yourself, because as recent as a couple of years back, almost all the leading insurance companies have updated their mortality table to 120. All of us in the audience today, we're all projected to live a lot longer than the previous generations. So how to make sure we have enough money in our 80s, in our 90s is critical. Then you have leftover money. Really make sure you have emergency fund. With the volatility in the market, with the job market, it is critical. And many of us are in the audience. You may be startup founders. It is important for us to know that we are actually having enough money if there is a break in cash flow. Tim mentioned earlier, we run our personal finance like a corporate. There needs to be some emergency fund that ensures that we can bridge the gap when there is a cash flow issue. Now, with all of that paid, this is what we call disposable income. That is the amount of money that we should then think about to invest. And with Moomoo, we really believe in prudent, cautious investment. So we highly recommend you all pay yourself before we start talking about investment. And therefore, let's take a look at the next slide. So now that we have thought about where and how to use the money, we should think about one concept that's really important to think about. What's this concept is called the wealth formula. What builds up wealth is essentially this investable money or investment money, and you give it time and you give it enough rate of return, plus or minus. Obviously, hopefully every year it's going up. There may be a couple of years that go down, but either way, give it time, give it rate of return, and eventually you need to beat inflation, right? Minus inflation and minus the eventual taxes when you withdraw that money. That's the wealth that we're able to build. So the earlier we can start investing, the better. Most of us know, the impact, the magic of time on money. And then the next question is rate of return. This is when you think about what asset class you want to pick, depending on the rate of return. So let's take a look at those two concepts real quick. When we say time, what does it mean? Time actually really mean money when it comes to investment. Why? In investment arena, there's a very popular concept and very fun, one of the core fundamental concepts, which is the rule of 72. What does that mean? The rule of 72 suggests that if you use the number 72 divided by your rate of return, you will be able to then understand how many periods of time your money can be doubled. What does that mean? Let's take a quick look. Let's say there are 3 different kinds of ways to invest your money. Left is a rate of return of 4%. In the middle is about 8%, and the right-hand side is 12%. And this hypothetical situation, this investor starts with a $10,000 worth of money. Most of us probably, would say, yeah, 10,000, I'll pull that out. But if you start at the age of 29 and let's say this is potentially bonds, which gives you about 4% rate of return, by the time you're 65, your money would have doubled twice, because 72 divided by 4 is 18. So by the time this person is 65, that 10,000 would have become about 40,000. However, if you look at the same concept, the 8% means your money doubles every 9 years. What does that mean? For a 29-year-old who invests a $10,000 worth of money, he will end up having $160,000 by the age of 65. That's a lot better. But let's look at the right-hand side. If the rate of return of this particular asset is 12%, by the time this person turns 65, the money would have doubled every 6 years. So you can see how many times it doubled, and it becomes actually a whopping 640,000. That's a huge difference, just depending on what kind of asset you pick. Do we all become this lucky? Not always. So what is the better way to think about then the risk versus reward? As we all know, the higher return comes with also higher risk. Let's take a look at the next. This is where things become very tricky quickly. We mentioned earlier, there could be 1,000 different kinds of assets that you could invest in, and they all carry different risk versus reward. And also, just to make things even more complicated, there's also the liquidity difference. For instance, real estate investment, a lot of us like that. And I myself invest in some real estate as well. Real estate investment is not very liquid. On the other hand, cryptocurrencies, they're very liquid. You could even trade them 24/7 if you want to, but they're also risky because almost every hour the price is incredibly different. On the left-hand side, however, another very common type of investment asset class is angel investment or equity investment. This type of investment, if we did it right, or if you have picked the right team, the right company, let's say wind the time back, what if we had invested in Facebook? What if we invested in, for instance, Snowflake? Or what if we have invested in Zoom? This would have been an excellent angel investment. However, statistically speaking, 90% of the startup ended up folding in their early years. So that is also super risky. And how we think about that, we say, hey, maybe it's lower risk. Is it true? If you pick the right ones. Then that takes us to another concept. Sorry, Tim, just a real quick fly back.
Yeah.
So that takes us to something that many of us actually do have the ability and the information to research, which is bonds and stocks. But bonds and stocks are also not born equally the same way. And Investopedia, in fact, summarized this very well. If we think about the risk versus return, bonds and stocks, they themselves are different. Money market, for instance, low risk, but also low return. And then that risk profile rises as you go up from the big companies, blue chips, into mid cap and small stocks. But they have higher rate of return while also carry higher risks. So that's quite a bit to think about. Let's say hypothetically, we have done this analysis to realize we're really busy. We're not going to go fix bathrooms in a house that we purchase. We're not going to have as much data to screen all the angel investments. Individual stocks, from what we have seen at Moomoo, it is still a very popular type of investment asset class. So let's take a look at that. How do you then pick stocks?
Yeah, so as we get into stock picking, I also want to remind everyone in the upper right-hand corner, you'll see a QR code where you can download Moomoo if you haven't already. As we go through how to pick stocks, we'll discuss some of the features that you can use in the Moomoo app. So if you'd like to follow along in the app, go ahead and download the app.
Before that, we'd love to have a poll. We'd love to know our audience. How do you currently pick stocks? So go ahead and cast your votes. Oh wow, I'm seeing very interesting answers. Very cool. Yeah, go ahead and cast your votes. How do you currently pick stocks, Tim?
Yeah, I would say I probably use a mixture of recommendations from financial sites and then sticking to industries that I know, which looks like one of the more popular ones here.
Yeah, absolutely. This is how, again, quoting Warren Buffett, buy what you know. Obviously, that costed him a little bit because he didn't quite understand, for instance, crypto when it was rising like crazy. But at the same time, he is content with that strategy because he wants to make sure that he understands exactly what he's putting his money in. So I think that makes sense. We've gotten about more than half of our audience voted already. Let's just give it another push. You guys go ahead and cast your vote. Would be great for the rest of us all to get a sense for how we're currently doing our stock research. All right. Shall we? Let's take a look. So you all, can you see this? So we see a lot of us do watch opportunities in the industries that they know. And actually a really good number of folks, you guys also do your own research using a multiple number of data sources. If you do so, you are definitely ahead of a lot of other investors we have interviewed. We do see that increasingly more folks look to the influencers as well as to your point, Tim, the financial sites. Oh, I did see it's interesting, really, the rise of social impact. There are also folks who do their research on social sites like Reddit or Discord. Let me stop sharing. And I think, Tim, this is why there's some interesting features within Moomoo that may help folks to expand outside of their current sort of tried and true industries, right?
Right. Yeah, let's dive into those. So I'm going to close out the polls here. So one of the features that can help you discover hot sectors is the heat map feature in the Moomoo app. So to get to this feature, go to the Explore tab, and then you'll see heat map in the upper right corner. And what it looks like is the middle screenshot there shows sectors, labeled in either dark red, light red, green, or light green, dark green. And it just kind of shows, like how those sectors are performing, what's hot and what's not. And you can filter these by market cap, volume, turnover, etc.
Yeah, this is almost very similar to how, so for instance, you are first just approaching, a lot of music on Spotify. You need a way to sensibly zone in on the right genre, and sector in this case would be the genre. But as we know, the economic cycles, not all sectors will continue to be hot. It's really helpful to have some data that helps us to quickly screen, depending on the time horizon we're trading. You can really find out what stocks, for instance, have risen in the past shorter period of time versus the longer period of time.
Right. So
Great.
another feature is institutional tracking widget, which is like a cheat sheet. So it's under the Explore tab also. If you go about halfway down the page there, you see in the screenshot on the left. And then you can pick the institutions that you're interested in and view their holdings and performance as shown on the right-hand screen there.
Mm-hmm. Great. Yeah, I personally used to, and this is a little bit of a personal story to share. Before I joined Moomoo, I used to go to listen to the annual shareholder meetings of these big investment funds and manually go through the SEC filing that they have reported to identify what stocks they have bought or sold as a way to help myself build my watch list. After I joined Moomoo and realized this is a thing inside the app, I was really happy because I didn't have to go through that manual process anymore. And this, by the way, is updated every quarter.
You're right. Okay, so now we're going to move into how to evaluate stock fundamentals and key metrics to use.
Yeah, this is to Tim's point about managing. Think about the company financial reports. Not one thing I recognize is not everybody is very familiar with all the financial metrics, and you don't have to. And when it comes to using stock fundamentals, ultimately what we want to pick is we want to avoid buying an ill-run company, right? We don't want to buy a lemon. After some research, we have found that if you don't remember more, there are three things that it is helpful for you to think about as you evaluate stocks that are that show good performance: EPS, ROE, and institutional holdings. So EPS means the current reported net income minus its preferred dividends. So all the money that they were able to pull in that period of time, divided by their total number of shares outstanding at that particular time, that the end of that period. ROE is using that same net income number to divide by the shareholder equity, because they actually reflect how well this business is able to produce a meaningful return. It's almost like I give you $10, how much more can you make for me? So that's ROE. The last one, institutional holdings, will share with you how you use that to your benefit. Let's look at EPS. Why is EPS that important? This is actually a study that was done by the industry, by an industry research arm, and they have found during 1950 to 2001, about 70%, 75% of the companies that were that out of those 600 best performing stocks, about 75 of them all showed an increase of EPS. And that is really important because that, although there is not so-called causation, there's a very strong correlation with EPS and the eventual stock price increase. So that gives you a good idea for what if you could plot out the EPS in each period of time and trend it over time so that you can quickly identify, hey, let's say I heard of NVIDIA and I'm curious if NVIDIA is a good stock. What if I could see that trended line so that it helps me to see if NVIDIA really showed a growth in earnings per share? And it did, as you can see in this screenshot. The next one is Tesla. I have to agree. When I first heard of Tesla, I was very skeptical. It was really expensive. It was so expensive already. Should I even jump in at all? But if you look at Tesla's quarterly growth in terms of EPS, it did also show a very strong pattern of growth. This kind of data is really difficult if we are all going through the SEC filing and try to plot them out on a spreadsheet. And we recognize that. So something I really personally enjoying is Moomoo make this super easy. You want to go to each of the stock quotes page. And within the stock quotes page, you are able to then click on financials and you're able to load up this trended line. We mentioned about ROE earlier. ROE is about giving any management team the same amount of money. How well can this team, depending on all the business decisions they make, how well can they turn that, $100 or $10 into greater income, greater, essentially, what's that called? Return on equity. And again, NVIDIA and Tesla both showed a really strong growth in this in this particular dimension as well. So let's show. The next one we mentioned is institutional holdings. Why is that important? What if we say we think a stock is good, but ultimately the stock is not picked up by any of the professional fund managers? Then that would be a sign maybe this is not that great because these people are paid to do this research 100 hours per week. They didn't think it's good. And the reverse might be true. If these institutional managers are gobbling up all the shares you could find for, let's say, NVIDIA in this case, that might be a sign, isn't it? So how do we think about that? This, again, in the NVIDIA quotes page, and you click on analysis, you'll see if institutions are holding NVIDIA with an increased trend. So this gives you a sense of comfort that this might be a stock that's actually worth holding for. I don't know if you all have the Moomoo app handy. Again, just wanted to remind you, you see on the top right corner, there is a QR code. Go ahead and scan that QR code. You can download your Moomoo app and you can just follow us as we go through these functionalities. So Tim, I believe you and I debate about this too, right? The PE ratio.
Right. So yeah, price to earnings ratio, which is the market value per share divided by the earnings per share.
Yeah, the PE ratio is a very commonly brought up concept. Almost everybody that talks about stock would say, check out the PE ratio. But PE ratio could be misleading. Let's say Tesla, again, few quarters back, even now, Tesla still is out of the whack in terms of its PE because it's just expensive and its earning is not as much. However, if you really study that industry and look at its peers of the same business models, Tesla really show a very strong growth trajectory. And that's oftentimes price reflects on the expected return given their ability into the growth of the future. So how do you then discern that compared to their peers? Something that I always looked out for, and I was wishing there's a better tool. That takes us to our third step in terms of stock picking.
Yeah, so now we'll talk about how to compare and finalize your picks. And so one way to do this is to compare stocks against each other. So you can compare up to 6 stocks together in the Moomoo app. So on the second screen over there, you see the various stocks listed, and how it shows them is down below or in the bar graph there in comparison to one another. And you can look at them, and see relative strength and quarterly growth in earnings per share.
Totally. Yeah. I found this super helpful. I used to have to mentally remember, let's say I'm looking for something that is hopefully, PE ratio wise better than its peers. Oh, and we just mentioned about EPS. How is their EPS compared to other folks? You can see, in this case, we're using NVIDIA and Qualcomm as a quick example to kind of compare each other. You see earnings per share. This is the second screen to the right, from the right. EPS shows a steady growth for NVIDIA, while Qualcomm, its EPS grows up and drops down, grows up. So it didn't show as strong of a trend. And in the stock compare, you actually get to pick them, put them all side by side. In fact, if you just click on, let's say 50-week high, it immediately changes into a trend line across all of these stocks. Gives you a really nice way to look at them versus others. And we oftentimes like to say, what stock can beat the market? In fact, you can put the market indices here as well as a benchmark as you think about picking one of these two from the same industry. And I want to just pause real quick, Tim. I saw a question about where you can download, and thank you guys for answering that question. So for any one of you guys curious about where to download the Moomoo app, you can see in the chat box we have answered the question. So go ahead and click on that link. Another question, by the way, Tim, we received from the Q&A is, how often does Moomoo update a stock's institutional holding? For an individual stock, we update that information as quickly as the information is filed. So as you can see, institutional investors are required by SEC to update their filing every quarter. So every time they update, we get that data ingested right away. And for shareholders, on the other hand, you will see again in the Moomoo app, if you click on summary in any of the detailed quotes, you can see their individual shareholder information of buying or selling. Anytime those events happen, we update that information within Moomoo. So the question is about, did Mark Zuckerberg sell more Facebook shares? Yes, you'll find that within Moomoo right away. I hope that answered your question, Peter. Wonderful. Let's go on to the next. Oh, before that, we're talking about emotions, right?
Right.
Oh my gosh, I can't wait. We actually have a poll. We'd love to know if our audience recognize that they have the same situation. We're curious if you guys have ever encountered emotional trading. Do you want to describe a little bit about what emotional trading feel like, Tim?
Yeah, so basically it's when you're not sticking to your plan. You're kind of, getting mad about your losses, or, just making decisions based on, a whim, or, like whatever it is that like has you all flustered. So one of the things we talk about is trading psychology and how to avoid making those mistakes.
I think our colleagues also researched to see that some folks even report when they are experiencing emotional trading, they even have physical feelings in terms of heart rate beats faster, feel like their head is like heavy. It is really a thing. If you're curious on it, actually, folks that are in the audience, search it up for the phrase emotional trading. There's actually a lot of literature covering that particular topic. So before all of us, jump into either the stock market or even any other investment tools, we want to kind of help you understand and recognize a little bit about emotional trading. So let's see. We got several folks casted their vote. Looks like many of us did feel like we've had emotional trading before. I'll go ahead and end the poll. Let's look at our results.
Yeah, it
And
looks like the majority have done some emotional trading before.
yeah, it's so true. We are humans, right? When we have to deal with so much information, it is definitely reasonable and understandable that we develop some mental shortcuts to deal with this overwhelming amount of information. But our emotions, either they could stand in our way to become a good investor, or we can find a way to tame it. How do we do that? I think there is actually a small little 3-step process. Let's take a look. Oh, funny. Oh, yes. This is actually a good story.
Yeah, so
Want
this
to share with
basically
us?
shows, what the S&P 500 index has done over time in comparison to people who buy high and sell low. And what it shows is that the S&P 500 indexes outperform people who, kind of engage in emotional trading or, try to beat the market.
Yeah, absolutely. It's this is really where it's one of those things that we as individual investors, we don't get to see all this information from that higher bird's eye view, but it is quite incredible now that we look at this data to realize, gee, if someone could have given us the crystal ball, we would not have sold at the time we sold, we would not have bought at the time we bought. So it is important. Usually the disciplined ones tend to have a better return.
That's right. So next, we're going to talk a little bit about, just the steps to take to kind of analyze your risks versus reward. So it starts with self-observation and then going into your trading plan. It's always good to have a plan. And then analyzing and reflecting to make sure you are following that trading plan that you've set out for yourself.
Yeah, so let's see, how does that work? Let's take a look at the self-observation.
Sure. So one thing that the Moomoo app offers is paper trading, which is simulated trading using virtual funds. And you can find this under the Me tab and go to paper trading. And then once you're there, you can pick a market that you're interested in, whether it's Hong Kong, US, China A shares, or Singapore market. And every user starts with $1 million in their paper trading account to play with. And we say play with because this isn't real trading. It's simulated, so that way you can use fake funds to try and test your theories, maybe buy some stock that you're interested in and just see how it performs over time for a little bit first.
Yeah, super helpful. This allows folks to not having to lose any penny while at the same time practicing out. Let's say, for instance, again, using Snowflake as an example, when it first came out, everyone wanted to dive in with its IPO price. As time went on, did it play out as what you thought? We really could actually try to do a little bit more independent analysis and use paper trading to kind of test out whether our sort of prediction or analysis on where the price was going to go actually played out or not. Because paper trading is, we use the real-time data to do all this analysis.
That's right. So another feature is trading notes, which makes it easy to track, what it is that you're doing. It's on the detailed quotes page, and you select trade, and then select the trade journal icon, and then you can review your positions and profit and loss.
The trading notes is it's funny. We were just in another seminar with someone from from Benzinga, and he's been trading since like 20 years ago. He had told us that he used to literally using a journal book excuse me, to track his trading notes. For me, someone like me who always loses my notebook, I was really happy to find out there's an app that actually allows you to jot down your thoughts within the app itself, and you can come back. Also, as a user of traditional brokerage firms, I have never heard there is such a thing, even within my traditional brokerage apps. So this thing really becomes very useful.
So now we're going to talk about following your trading plan.
Yeah, the trading plan is a thing that is, we thought about how to really help folks understand trading plan, because this is where, by the way, if stock trading feels hard, this is where it feels really hard because it's very abstract. But trading plan ultimately boils down to a decision-making process for a very specific business transaction. So if we were to reflect back on negotiating a contract with a vendor, or let's say deciding whether or not to buy a house, buying a stock with every single transaction could go through that similar analysis. It's a risk versus reward. But then how do you break down that risk versus reward into sensible components? The very first thing is to determine risk tolerance. Many financial advisors like to ask you, what's your risk tolerance? Well, there may be some sort of attitudinal risk tolerance differences. Most people really should first and foremost think about what is the purpose of this money? Let's say we have a $100 bill in hand. Well, actually on your brokerage account, let's say Almu, is this money needed, let's say in 3 months, 6 months, a year? Do you need this money to pay for the next rent? Anything that's needed in near term, you may want to avoid risky trades. That is the very first thing to think about. And then the second thing is, now let's say I am willing to take risky trades, but then I'm super busy because I have a new product launching. I have to meet the client. I have a deadline at work. That means you don't have as much time to commit. Then that's maybe, even if you are willing to take risky bets, but maybe you don't want to do a specific investment that requires active monitoring. However, let's say this is a time that you are able to afford at least a good amount of 10 minutes, 20 minutes per day, so long as you can set up some alerts on your phone. You are willing to take some risky bets and some time. Then you can decide on, I'm willing to take a little bit riskier bet, and I'm going to trade with a plan that will allow me to allow this particular transaction to fluctuate by, for instance, 30%. Versus I don't have time and this money is really critical, I can't afford to lose, then you will set your trading plan for this particular transaction within, for instance, 5%. If I lose 5%, I'm selling. So that's what this whole concept of trading plan is. It is really about understanding what exactly you're seeking in this very specific transaction. And now that we have that understanding, we want to bring back to institutional tracking. Why? Because it is helpful to see, as much as we are deciding on what we think is good or bad, why don't we also cross-reference with the fund managers? What are they actually buying and selling? And this is where you may want to revisit that particular feature as a way to, in this case, give yourself a quick kind of confirmation. Oh, it looks like Lucid has been bought by, for instance, in this case, the Vanguard Group. That's interesting because I am also looking at Lucid for potentially watching or buying. So again, if you don't have Moomoo, go ahead and scan that QR code or follow what we have posted in the chat to download it. Go ahead, Tim.
Okay, so courses for technical and valued traders are offered in the Moomoo app. So you can get to these courses by going to the Moo tab in the bottom menu and then the Explore tab and go to courses in the library there. And we have everything from, investing 101 to, more tough subjects like options.
Yeah, this is so true. As we think about having a trading plan, it can become overwhelming. Either you are a technical trader or a value trader. There's always more than what we know to be learned. And we also interview a lot of customers to hear that many customers say they follow influencers. but they do worry a little bit about, do the influencers themselves have proper training? Do they always give the most objective guidance? What if I become a better independent thinker? And that's why Moomoo launched all these courses. We also have not stopped. We continue to push more courses within Moomoo. So really encourage you guys to discover this. Just turn it up, and as you go jogging, as you go drive to work, give yourself that investment of knowledge so you become a better independent thinker.
Yeah, definitely. And then one of the next steps is analyzing and reflecting.
Yeah, this is one of my favorites. As someone, if we consider stock trading or any type of investment as a sport, we all know if we pick up a new sport, we would always analyze our moves and think about where and how we could improve, like tennis, like soccer, like basketball. I'm actually really terrible at any of those sports, but I do analyze my snowboarding skills, and I keep thinking about my toe edge versus heel edge. Post-trade analysis is just nothing but the same like that. We had a trading plan. We had a specific assumption that went into our trade. Post-trade analysis basically is for us to play back on the activities we did and correlate that with what exactly did pan out in the market. And we then look at, we thought we were going to make, for instance, 5%, 20% from this particular trade. Did we? We thought this stock was going to go higher, and eventually it may have gone lower. Why? What exactly happened? Did they all work out exactly as I thought? So post-trade analysis really is about almost removing emotions and use the actual data to do an actual versus projection analysis. There are also features within Moomoo that allow you to kind of help you analyze that, right?
Yeah, exactly. So one of those features is similar charts. And you can get to the similar charts page by going to the detailed quotes page, select charts in the settings, and select similar charts. You can scroll down to see stocks with similar price movements. And this just basically helps you compare, the charts of one stock to another to see if patterns are going to reflect in those.
Yeah, this is actually an AI feature that has been cited as one of the best hidden gems, because a lot of folks are trying to do their own price prediction. Ultimately, price prediction is a mathematical function, especially for short-term stock price movements, because short-term swing traders in particular, they tend to think about, the price itself reflects the demand and supply. So if, at this point, some folks who trade stocks, they would say, even the fundamentals don't affect as much in terms of the short-term price pattern. Then what if we turn it around and say, let's look for price patterns that already has played out, and what did they do next? That would become essentially the training data set, and then your AI will show you what the price might move to. I see that Tim is showing us the trading notes too here.
Yeah, so trading notes, like we discussed earlier, where to go and find them, but it basically just makes you or helps make you make sure that you're staying on track with your plan. So, going back and analyzing and reflecting and seeing why you, placed a trade in the first place in your notes can definitely help with that.
Yeah, again, if you had your notes on your journal book, that's totally fine. I won't judge you. But if you had it on your digital notes already, now is a good time to kind of dig them out again and take a quick look to say, oh, I thought it's going to be like this. Did it actually work out that way? If not, why not?
Definitely.
That's a wrap. It was,
So, yeah.
we hope this short webinar, we actually jammed in a lot of content, but we really want to make sure you guys get a chance to kind of think about personal finance with a little bit of a simpler framework. And if you guys like it, give us a thumbs up. like, comment, and subscribe. Go ahead and really subscribe. We have our webinar landing page at webinars.moomoo.com. You can also email us. But in the meantime, please do feel free to raise your questions.
Yeah, so this is a Q&A time now. So if you have any questions, please raise your hand or like use the Q&A function here. I think, oh, it seems we have like a question in the Q&A, but it seems to be more about Moomoo. So
We did answer. We answered that
Okay.
question from Peter earlier.
Okay, great. Yep. All right.
Did this
Let's
make
see.
sense, you guys? Do you guys have questions? Is there anything that always bothered you in terms of either other needs? Oh, in fact, I totally forgot. We also had wanted to know if folks have been taking training courses before, and what topics do you rather want to hear in our maybe, in the future, what topics do you want to learn more about? We'd love to know. What do you guys think? Have you always wanted to learn more about technical analysis, fundamental options?
Mm.
Oh, wow. Options. You're actually really smart to want to learn more about options. Something we didn't yet to cover. It's one of the more sort of advanced techniques is when you buy a stock, and obviously we always hope to buy low, sell high. We're making an assumption that it may go higher, but to give yourself almost a little bit of an insurance, you can buy a contract, an options contract that is exactly the opposite direction, to help yourself with a little bit of assurance. And exactly how to do that, how to place your bets, it is a little bit more to just what I have said, but I highly encourage you to look it up, covered call for options. I saw Kelvin said, don't buy options, sell them, be the house. It is, so I'm not recommending you guys to start trading options without learning, but it is actually useful to know what it is, how to use it to your advantage. In fact, we see the usage of options rising, both in retail investors, as well as you all know, the professional traders, they always use options to their advantage. So let's take a look at our audience voting results. We have a fairly even split, but it looks like options, fundamentals, and all of the above is some of the more popular choices.
That's great feedback. Thanks, everyone.
Yeah.
That's why, Kelvin, agree. If you know what you're doing, your risk is better controlled for sure. I saw some questions. How to invest in stocks in 2022 for beginners? I think I'll try to tackle that, and Tim, please feel free to chime in if I miss anything. I think how to invest in stocks in 2022 for beginners, I highly recommend the first thing is to think about what stocks you may want to watch for. Right? So don't yet put in your money, but learn how to watch stocks. And the discovery process is actually a little bit of a learning experience. The second, in this case, first and foremost, is to think about where is the economic cycle going. So you pick a winner in the industry that are rising, not betting on industries that are actually dwindling. The second is to think about where you can find inspiration from other folks who spend more money than us. So this is where the institutional holding will help you. This is also where you can monitor. We actually forgot to mention within Moomoo, one of the really beloved features is the Moo community. This is where you see a lot of the social chatters. Folks share their trading ideas and what exactly they have bought or sold within that, within the social chatters. That's another way to discover. Once you have discovered, I'd recommend you think about what we just went through, which is treat every transaction as a high stake business transaction. Decide exactly what your risk exposure is. Don't lose more than 5% if this is your first time buying or selling anything. And I also agree, if you don't quite know, you can try to buy something that is a blended risk. For instance, even Warren Buffett in its shareholder meeting has said, if you don't know what to buy S&P 500.
Right.
Or Calvin, agree, SPY, index fund, because that way you are betting that at least your portfolio will grow just like what the economy is going to grow. And Tim, you had a comment you want to make?
Yeah, I was just going to say another great thing for beginners, like we mentioned earlier, is paper trading. So it'll let you kind of, test a few stocks and see how they do with virtual money before investing your own money.
That's true.
Great. Thanks, Carolyn, and thanks, Tim. And again, we want to say that this event is just for informational and educational purpose only, and it's not investment advice or a recommendation to engage in investment or the financial strategy. So yeah, so keep learning. And also, this is our first time at HISA that we host this type of seminars on the personal finance. So really thanks, Carolyn and Tim, for your time and for sharing this amazing knowledge for our audience here. Yeah, thank you.
My pleasure. Thanks for joining us, everyone.
Yeah, thank you guys for having us. We are just super excited about helping more folks to learn and really demystify investment. And really, my personal passion, why I even joined Moomoo to begin with, is to help more folks to invest and make money work harder for them. So if that has enlightened any of you guys, I'm super, super happy. I'm going to have my glass of wine and celebrate.
Sounds great. And so people, take out your phone and scan the QR code here and learn more about Moomoo and also learn more about how to manage your wealth. And also very lastly, happy Friday to everyone and have a nice weekend. And we'll see you next time.
Have a good weekend, everyone.
Thank you, guys. I saw a hand raised. Do we want to maybe, Jorge, do you want to raise your question?
Sure. George.
Oh, I'm sorry, George.
George,
Jorge.
I'll allow him to talk.
Sorry, I clicked around. I just want to. Actually, I was to keep it thumb up. I didn't see the noise.
Okay, no worries.
Give it thumb up the presentation. So.
All right. Yeah. Thank you for supporting. Happy Friday, guys.
You too. Nice to meet you. Thank you.
Yeah. Okay. Bye.